Over the past week, big tech stocks have taken a hit. Companies like Netflix, PayPal, and Facebook's parent company Meta have all seen their stock prices take a nosedive. But what's causing the dip? Hey guys, Mackenzie here to bring you the latest on this trend. And by the end of this video, you'll know if this is just a temporary blip or a big warning for big tech. Big tech started out 2022 on uneven footing. January was not kind to FANG stocks or other big tech giants like Microsoft. For a while, it looked like the outlook for big tech companies was improving, but then Meta Platforms released their latest quarterly earnings, which shaved about $200 billion off of the company's stock market value after its shares plummeted 23%. So, is it purely due to Facebook's disappointing performance that we're seeing such a dip in big tech stock prices? Or have investors fallen out of love with the fourth industrial revolution? On February 2nd, 2022, lots of big tech stocks took a nosedive, which led to the Nasdaq Composite Index dropping 1.6% and the S&P 500 dropping 1.2%. Now, let's take a look at how the FANG stocks and the likes of Tesla and Microsoft fared. First up, Facebook. Meta Platforms, the parent company to Facebook, saw its stock drop 24% on February 3rd, 2022. In sharp contrast to its all-time high of $382 recorded on September 2nd, 2021, Facebook's share price dropped to about $245. This followed disappointing quarterly earnings results, as well as the news that Facebook's daily active users had dropped for the first time in the company's 18-year history. For a 5-year view of the performance of this stock, take a look at the description box below. We put in the link to the performance of all of the stocks mentioned in this video. As a FANG stock, Apple is not immune to what's going on in big tech. But its last set of quarterly numbers means that its stock price hasn't been hit as hard as some of the other big tech stocks. Its current share price of $175 is not too far behind its 52-week high of $182. Amazon had a stellar 2021, recording an all-time high closing price of $3,731 on July 8th, 2021. However, its stock price has since taken a dive, sitting at around $2,819 today as supply chain issues and labor shortages impact its performance. Netflix is one stock that's seen a significant drop from its 52-week high price of $700.99. It's dropped to $416 at the time of this video. It wasn't too long ago, November 21st, 2021 in fact, that it saw its share price climb up to $691.69. But concerns over the streaming business model have taken hold, and a drop in subscribers has made investors nervous. A stock split recently announced by Alphabet has seen Google's stock price performing well in recent weeks. That, combined with its stellar earnings in the fourth quarter, means that its share price has remained around $2,930, not too far off from its 52-week high of $3,030. Warnings of weaker growth and a decline in volume have caused PayPal shares to plummet. Shares closed 24.6% down at a 21-month low of $132.57 on Wednesday, February 2nd, 2022, a move that wiped around $50 billion from PayPal's market cap. Tesla's share price is also facing a challenging time. News that it had to recall some of its vehicles due to safety concerns, as well as new and stiffer competition in the electric vehicle market, means that its stock price opened down to $882 on Thursday, February 3rd, in stark contrast to its 52-week high of $1,242. Microsoft shares have performed relatively well after the company experienced higher than expected earnings and revenue for the fiscal second quarter. However, it is not immune to the concerns surrounding big tech stocks. It's seen its stock price drop to $309 on opening Thursday, February 3rd, 2022, from a 52-week high price of $349.67. So why is big tech taking a hit? Well, some have argued that big tech is overcrowded and overvalued. So when disappointing results come through or the US Federal Reserve announces that it might hike interest rates, this leads tech stocks to retreat. The less than stellar results reported by Facebook, the disappointing results from PayPal, and concerns over the Netflix subscription model all play into the worry that big tech has outsized growth prospects. As one of the most overvalued asset classes, big tech is left vulnerable to meaningful downside corrections. That said, many of the tech stocks we've discussed today still make up a large part of the portfolios of some of the most successful investors. That's it for today. If you enjoyed this video, leave us a comment below with your thoughts and click the subscribe button below so that we'll be sure to see you next time. Thanks again.